Hi, and welcome to the Digital Investor Podcast. I'm your host, Matt Rada, and today we are speaking to Ewan Finzer from Venture Forth Capital about managing multi-million-dollar website portfolios. But in particular, what we want Ewan to give us some insights into is what do we do during a potential recession or a market downturn at the multi-million dollar level when we're managing many websites? Because many of you will remember Ewan. We've had him on the podcast numerous times. And the last time we spoke, Ewan was explaining how he goes out and starts websites, but not just one at a time. He will launch 20 to 30 websites at a time. He's raised funds to do this. It's a multi-million-dollar fund. And so what I thought today, we'd get Ewan back to give us an update in the current marketplace and also with the changes that are happening out there, not just in the economy, but also in the search space and with websites in general. So Ewan, thank you so much for coming back on again and speaking to our community here in Australia.
Yeah, it's great to be back. Thanks so much.
Yeah, and it's been really good, you and I catching up and finding out what you've been doing out there. So, like I said, you normally are building websites and building a big website portfolio in primarily the content space. Do you want to give us an update on some of the things that you've done recently? Because obviously, can you also touch on some of the success that you've had there over the last couple of years in particular?
Yeah, for sure. So some of the listeners might recall, we had launched back in 2021. We had launched a couple portfolios targeting ground up content sites, which really hasn't really been done before at scale. So it's pretty exciting. We kind of
Yeah.
built an entire team and a system and even tech around both launching and managing and growing these assets, in a portfolio. And the real inspiration behind that was having read this book by Jim Collins, Good to Great, and a lot of his other excellent material out there. Having learned some rough lessons from acquiring, back 3-4 years ago, sites where kind of lose your shirt on. We lost our shirt on a couple, and we had some that went up. But I was trying to understand, how do we underwrite the risk, and what are the opportunities here for our skill set in particular, which is really around identifying gaps in markets, and bringing content to bear to kind of serve a need. And so we had stumbled on this concept called fire bullets and cannonballs, which actually is fairly well known, but we kind of internalized that for our process. And so we launched these sites. We launched them, like you said, all at the same time because we really wanted to understand how to be better capital allocators. There's a lot of, in this community, there's so many lifestyle entrepreneurs, which is, where I come from, quitting the day job, going full time online. And there's also some really big media players, that have acquired old magazines and kind of turned them into digitally facing publications. But there's very few kind of media companies or operations that are operating that middle ground. And so I really wanted to professionalize, kind of our process, and using this analogy of firing bullets and cannonballs to kind of see what sticks first, firing, a limited amount of capital, but doing it in an organized fashion and doing it across a number of potential ideas. So we kind of go to the drawing board, we find some markets we like, some niches that we think have potential. And rather than try to fall in love with one or two or convince ourselves, through research that one is better than the other, we just say, look, these are all good verticals. They all kind of meet our criteria for a worthy niche to go after. But there's a whole black box with Google, and in general with a lot of these platforms, where you don't really know the market until you're in it. And so how do we get exposure to a market and kind of do a little soil sample before going all in and expending all of our capital, all of our gunpowder, this analogy, on one or two ideas? So we like to launch all of the sites kind of in a disciplined, organized way at the same time, which requires a certain amount of scale and coordination that normally a solo shop, a solo operator, or a small media company wouldn't have the ability to do. So we kind of had to build that infrastructure and really like focused on measuring, each step of the journey. So I don't get too far. I encourage, I guess, our listeners to go back and check out those older
Yeah.
podcasts. Yeah, we've been growing those, and those have continued to grow. We're now around 2 years in to one of them, and probably 18 months in, 17 months into another. And I'm trying to, I don't have the stats right in front of me, but we're for one of the portfolios, we're on our way to I don't want to misquote here, but we're hundreds of thousands of page views a month. I'd say close to 300,000 page views on per month on one of them, and then on the other one, we're 600, 700 page views a month. So we're making progress and we're monetizing those sites. We're probably, I don't give, I don't have the numbers in front of me, but we're kind of in that process now of monetizing them, adding display ad networks, adding affiliate optimizations. And so, yeah, that's kind of where we are. And so everything's pointing the right direction, but the proof is in the pudding. Like we have the traffic, and it's kind of like, well, so what? Now what do you do with it? And so we're kind of learning, in that phase. And then as we're getting new capital coming in from capital inflows, we're trying to decide how to reallocate, which sites to cut bait on, because, yeah, they're growing, but they're not growing nearly as fast as these other ones, or they don't have as much affiliate potential for high value affiliates. So we're kind of working through that messy part of it. But that's the fun part is finding the real winners. And yeah, that's where we're at right now.
So this is perfect. So if you're listening to this and you're a beginner, or even if you're intermediate, just to summarize what Ewan's done, Ewan, you've done so well. Like you said, you're unique. This is the world's perfect study of what it's like to launch 30 content websites, exactly like anyone in our community is doing, except you can launch 30 at a time at scale. But understand, guys, what Ewan's doing is he's testing the waters. It's very smart. He's not going all in when you just do. And did you hear there too, like Ewan, you said, this has been a 12 to 18 month process. That's why this interview is the perfect timing, I reckon, because Ewan, as you know, we've got lots of beginners in our community who are, building up sites or buying sites. And so this is perfect to see where the data's at. And so really what you've done is approach it as a diversification portfolio approach to building brand new websites. And I do want to say something, if you don't know much about Ewan, listen to our previous podcast, but Ewan used to buy and sell websites just like Liz and I and all of us did, and in the 6 and 7 figure range. So Ewan knows what he's doing, but basically you let those websites mature, like you said, see which ones work, and they're the ones that you then step on the accelerator and really grow. And so out of that portfolio, this is obviously, I think you're too humble, Ewan. You've had some pretty big success stories, because let's now fast forward to where you're at, or come to where you are now. What have you decided to do recently based on the macro picture? Because I think that's where people will be. Again, we've got this beautiful data set in the form of Venture Forth Media, where you've gone out, done this. Where's your thinking at now in the current marketplace, and what have you just done recently with this portfolio? Because you've obviously got successful ones and ones that are just kind of sitting there tickling along, probably very typical to any of our listeners.
Yeah, so we're kind of interesting in that. So our business structure kind of follows my evolution as kind of an entrepreneur, and how we've kind of organically grown. Venture Forth Media is the holdco. We have some sites, back when I got started in 2012, 2013, where we started them back then. So we have now some sites that are getting on 10 years old that we started years and years ago. And then when we started doing the kind of the portfolio concepts, we have that's more in 2020, 21, 22. We have, those kind of big launches at scale. And then we have some we've picked up over the years, like you said, kind of buying and selling. And so, I kind of oscillated between this thinking of, okay, initially as a lifestyle entrepreneur, my only option was to build it from scratch. I didn't have capital. I had, $100 and my laptop. So, there were no investors back in 2012, 2013. This asset class was even more undiscovered.
That's right.
There was no one putting capital behind it, really. And so then I kind of evolved my thinking to, what I want to do when I grow up is just buy a bunch of assets, and I'm going to buy anything because I can manage it better. And then we did raise some capital to go do that. And we had some successes, some things that worked, but then we also had what I call the iceberg risks. The ones where the seller kind of disappeared. They, had a PBN network in the background, and the site kind of tanked 6 months later. And so we had a couple of those. And, Warren Buffett's rules, like rule number 1, don't lose money. And rule number 2 is follow rule number 1. Like that, despite, the successes, if you have one of those real big duds where you expend a ton of capital, that could kind of wreck the entire return profile. And so then I did some soul searching on like, okay, well, that didn't turn out as expected. So what can we do? And so then I kind of came back to our roots, I would say, and we started with this ground up concept, which has worked well. And I think particularly 2 or 3 years ago, 4 years ago, where we were in the economic cycle was, kind of multiples were increasing, easy money, people were raising left and right, and there's kind of bidding wars for assets. Good assets were getting, sold at premiums. There's a lot of competition, and so it kind of made sense for that market. But then when I kind of realized, really reflecting on it, I was like, look, it's not. I used to be like, I'm a build versus buy guy. I kind of did that evolution, and then I kind of have come not full circle, but maybe halfway back to this analogy of no, we're actually omnivores, and there's a time in a season to be doing ground up launches when the market kind of makes that make sense. And there's another time where when we enter periods of more uncertainty or where money gets tight, or higher interest rates, whatever, we can see from all the brokers out there right now, there's a palpable slowdown in deal flow, where people aren't listing as many sites at the high end. They're not transacting, which is kind of spreading this a little bit of that early, I don't say panic, but there's certainly a lot of hand wringing going on. And then you layer on this like the threat of AI, which is, there's a lot of hype to that. There's a lot of real truth to that. But the way I'm looking at the landscape right now is like, look, there's going to be opportunities ahead. So what we decided to do in Venture Fourth was actually sell a couple assets, kind of for mid six figures. And these were in, we had one in the kind of the music space, smaller fishing site, a site in the parenting space. And we just kind of took some chips off in anticipation of, one, the uncertainty that we're heading into, and two, the idea that uncertainty kind of breeds good deals. I mean, be greedy when others are fearful. That's another Warren Buffett adage. Like, just applying to the space, I think we're kind of entering that period where there's going to be some deals to be had, and so we want to be prepared to kind of do that cycle again. And if we can buy a bullet, buy a site for 20, 30, 40K, that's gets us out of the sandbox that we would normally have to go through when we're launching these ground up sites. So if we can find sites in verticals that we really love, that are like starter sites basically, but like not starter sites that are done for you and marketed, by internet marketers, but starter sites from genuine starters, enthusiasts, people that are passionate about the space, but just have lost interest or are now a little bit concerned or have to pay off, a bunch of debts or whatever. That's a win-win for us. If we can acquire at a great multiple in a vertical we would love to build in any way. And so I'm kind of preparing to kind of shift our business a little bit to be prepared, for that potentiality.
So that, Ewan, thank you so much for saying that, because, that's exactly what we teach here at the E-Business Institute, is to buy the genuine passion sites under that 50K range, even though it sounds quite small. And isn't it fascinating, like for you now? So this is super cool. So gone from, like you said, you're a buy versus build kind of guy, like figuring out, and now you come back to buying websites. But basically, you've raised some cash to cash up, to make sure you've raised a decent chunk of cash, like selling a couple of websites in the mid six figures. That's a good war chest to sit on, very Warren Buffett like, and just sitting there you've identified exactly like what we teach our guys, because it's relatively low risk, buying good websites under 50K that are, like for you and I, they look like starter sites to a degree. Well, they're run by people who are genuinely passionate about their topics, and they might just need some quick cash. And I think what's really cool here, can you give us an example of the one that of the one that you bought? Because I think that's a pretty much the perfect example of what hopefully we're going to be finding more and more.
Sure. So this is one where this is Captain probably a month ago, I'd say. And so we were selling assets. I wasn't quite in that buy mode yet. But sometimes one lesson I've learned is that the deals tend to come to you, and the opportunities come when you maybe aren't quite ready.
Yep.
And if that's why I want to have this war chest to be prepared for any eventuality. But we had this inbound from kind of a broker friend on a deal that we kind of look at a lot of prospectuses. We always like, say, yes, I want to take a look at this site just as to keep our deal flow pipeline full and keep us on our toes. But this one, it was in the fandom space. We love that kind of passionate user demographic. Yeah. And initially it was listed for, I think it was listed for 30K. And then we kind of came down over time. We were like, you know what, that's a little bit expensive. That was probably 3 to 4 times. And so we said, look, that's a decent deal, but we're more interested in acquiring something, around 1 to 2 times. And so we were kind of just patient. We said, look, this is what we can do. We can do, a deal for X. And no hard feelings. Had it, just said, look, if anything changes, let us know. And sure enough, it came back. I think the offer, there's like one middle point. It came down to like 14K or something, and then we kind of stuck to our guns a little bit. So now we can come up a little bit, but we ended up essentially purchasing this asset for less than 1.5 times times revenue. And that's a deal, a trade that we're going to do, kind of any day if we can find it. But again, part of it was being patient and not forcing the issue, not saying, look, we have to buy something, right away.
So because for you, the asymmetric risk is absolutely brilliant on a deal like that. You're used to running a multi-million-dollar portfolio. So if you're listening to this, understand something, guys. In this world of websites, this is when we can start to make some serious money when the market changes like this. Ewan's not taking a big risk here, multi-million-dollar portfolio of websites, yet he's buying sites under 50K. Anyone listening to this podcast is presumably in that case as well. Now, one other thing that I really like that from a risk allocation viewpoint and diversifying your portfolio. It's not only the idea of, like Warren Buffett says, buy when there's blood in the streets or the fear, but also I like it from a portfolio diversification or reducing your risk, because for you, that site now sitting in your organization, you know how to grow it. It's only upside. You can't really lose on that 15K buy price because you've bought it on such a low multiple. But also, do you want to mention, because it's an interesting little thing too, the challenge, I want to point out to people, what was this particular challenge? Was that the one that had the challenge around the advertising revenues?
Yeah, that's correct. So it was a site where I think it was around 40,000 sessions a month. And
Nice.
So it was on the Mediavine ad network, which is one of the popular display ad networks, but they've changed their threshold, and they kind of make any new buyer, new acquirer, new owner go through the application process again. So there was a very real risk that upon transfer you would essentially lose all that revenue because you wouldn't be approved. You'd be under their 50,000 threshold. So we kind of said, look, we don't know, and that's a legitimate risk. I mean, it's generating revenue for the previous owner, but there's no guarantee that can continue, and there's almost very little way of finding that out other than just applying. And in order to apply, you have to be the verified new owner, like on the documents. You can't just say, oh, he may be can we try applying and see what happens? So that was part of it. And so we saw, and again, since we're playing a longer game, our position anyway is, look, we're going to rehab it, do some improvements, come up with a new growth plan. And so, that 10,000 session gap is probably something that within a, period of 3 to 6 months will be kind of a rounding error, once we implement the growth plan. And so, we're not relying on that to be a revenue producer day one. And so I think that kind of gets this idea that you can kind of value these assets on things other than just the P&L. If you have some sort of growth lever, you can. But again, this was a great example. This is like a win-win, because not only were we getting a deal based on this P&L, but we weren't having to price in our upside at all. Which sometimes, if you're working with brokers looking at deals, you get caught in this. They'll say, here's the 10 growth strategies that you can do, and so you almost start pricing in sometimes, oh, well, we're going to do that. And so we're going to, we're going to realize that. But in reality, that's a risk. It's a huge question mark. And oh, by the way, while you're trying to do that growth strategy, someone might kick the legs out, from under you with a Google update. And so that's where like kind of that full circle thinking of like, look, if we can take a very disciplined approach and wait for the right deals to come to us, we can kind of mitigate risk on all sides. And like the one analysis I love to do is this worst case analysis is, hey, if we do nothing, if we just, tweak a few things, add a few ad networks, or just use the affiliate revenue, how soon can we make our money back based on that alone? And if we can pencil out where you're making your money back within 12 to 18 months, just even have the assumption that this is a cash flow into the ground scenario, then you're kind of covering that risk really well, and your growth strategy doesn't even have to work. You can basically say, look, this is like we can just hold it and even bake in a 10% decline. If you can buy assets with that assumption at a great multiple, I think you've mitigated risk all the way around.
And I love from your point of view, because of the way you run this portfolio of websites, it is a good analogy too. Really, you've just skipped the sandbox launch bit, that 12 to 18 months. You've just jumped out there, bought a ready-made website that's working, proven revenues, and your growth system. So now you've just short-circuited 12 to 18 months time. And so you've reallocated your capital from some of your winning sites into that, and you can just rinse and repeat. And so that's really cool and so anyone listening, as you know, this is where the sweet spot is, or the easy sweet spot. I mean, there's lots of sweet spots in buying websites. There's lots of strategies you can do, but in terms of a safety aspect, because our background's buying and selling bricks and mortar businesses where 50 grand is like, man, that barely covers 1 month's stock, or whatever. Mm-hmm. With these, the upside is so huge. It's a really good risk reward ratio. So that's super cool. Now, one question that just made me think, in terms of reallocating capital, Ewan, we have to share what you did in your sale, like how that deal, the one where I do want to, because I think it's a really good lesson. One of the ones where because of how to run websites, you worked with a listener that may be like typical high net worth listener listening to this podcast. Can you explain how that deal worked for that buyer who bought your site? Because I think that was you mentioned something there. That was a win-win from the way you described to me. That's a win-win outcome for both you as a seller of a website asset and for that buyer. So are you happy to share some of the numbers on that as well?
Yeah, for sure. So, I mean, that one in particular, I mean, my position is like, we never want to sell any of our babies, so to speak. We want to hold them forever, and almost to a fault where we're biased towards not selling. And so, that was part of the pros and cons list. It's like, well, some of these assets we actually really like and we believe in, and that's also what makes them great assets to sell, because what makes us excited about them is what makes a buyer excited about them too. So there's one site in particular we had to list it. I think we listed for like a 46x monthly. And so,
where did you list it? We should mention that too.
So we listed a couple sites on Empire Flippers. We sold another one on Flippa.
Awesome.
But yeah. And so, we actually ended up having a little bit of a kind of a race to the wire situation on that one, which is great to have, full price ask. And it kind of came down to these two options. One was like, we get our asking price. The other one was asking price, but the buyer seemed to suggest that he would want our input kind of moving forward, or want us to somehow be involved. And so, we were trying to make this again at Empire Flippers is like down to the minute, like, you got X number of hours to decide type thing on kind of both sides. And so we're trying to make this decision very quickly. And, something about the buyer led me to believe that, look, he's interested in us staying on in some capacity. We kind of had a rough outline. I just even sent over, here's some ways we could work together. We didn't even have an agreement in place. But I ended up going with that buyer because there was this potential where we could still be involved. And, we went through diligence and, took a little bit to transfer the asset and everything. Had multiple calls with the buyer, all the transition stuff, got to know each other. And the more he talked to us, the more we talked to him, I think it was clear to him that, he actually, as much as he was excited about owning this business, he didn't want to necessarily be responsible for holding the entire bag. And so we ended up coming to an arrangement where we get to basically operate the entity moving forward. So we get kind of our exit that we reluctantly wanted, and we
Yeah.
get upside in the continuing operation. And if we achieve certain objectives, we get a kicker and things like that. So we are now incentivized in a significant way to continue operating that and continue growing that website now with this new buyer, so we can bounce ideas off each other. But it was kind of a win-win situation where I think one of the problems in this asset class is that there's a lot of good macro analysis done on, like, this is a growing space, that the cash flow multiples are great. You can get them for a really good multiple relative to other businesses. But the real gap here is operational expertise. And that's something I've realized across the board,
Yes.
whether you're
Good
building or
point.
buying. Like,
Yep.
so if you can take a buyer who's like, he did all the math, it's a great vertical, it's a growing market, high margin, high affiliate commission, sticky, great EAT. We're getting into digital products. Like, it's a great case study in a good fundamental business, but still there's all this operational risk. And so I think it makes a lot of sense to kind of explore that relationship, both for us, but just in general in our industry. Like, who's going to do the operating? I know EF Capital, or another Web Street now, they're kind of democratizing that, where anyone can kind of invest in a deal. And I think it's a really important move for our space. And I think we need more of that, to really bridge the divide. Because I've seen a lot of examples where, capital does get involved, and because it's pitched a lot of times on the brokerage is like, oh, it's 1 hour a week, or 10 hours a week, or 5 hours a week, or 3 hours a month or something. It's not. You and I both know that, yeah, okay, it can be. You can probably do that for a couple months, where you can show how passive it is. But if you're going to do growth activities, or you're going to, like,
Yeah.
mitigate some iceberg risk, like a spam attack, like, no, you're not going to be spending 1 hour a week when your site's under attack, or when you're
And
executing a growth strategy, you're going to be spending more time. So
and we should mention, you know, the size of this site. Like, we're looking at in Aussie dollars, because ours is weak. Like, we're talking $500,000 web asset here, aren't we?
sure, yeah, exactly.
So it's not totally passive or anything like that. And like you said, I'm going to give a shout out to our community. If you're listening and you've done our course, you have this operational expertise that Ewan's talking about, because basically that's a content site. It's pretty much what we teach here at eBusiness Institute, just renovating the website, putting in growth strategies, changing around the affiliates to you. So going forward now, you still retain ownership of that. You've actually, so the buyer, did you guys come to a deal where is he doing an earn out with you, or are you actually retaining equity in this? So
so we've structured it. I'm a big fan of doing what's called phantom equity.
yeah,
Because I've been on so many cap tables. And we do this also with our, like, with other JVs that we do,
yep.
and some of our senior team. Like, getting on a cap table is really complicated, and there's a lot of, like, legal procedures, and depending on which states you're in, it gets pretty complicated. But if you can do a kind of a phantom equity structure that essentially it's a consulting agreement, but it functions like equity. You just set up certain clauses, and so that's kind of what we did essentially. And if there's an exit, we get participation in that, another exit. So you can structure it all the same. It's just not an actual. You're not actually on the cap table. So essentially, it functions as equity, and that's kind of, I'm a big fan of those structures, if you can do it.
And are you happy to mention that the percentage capital, so people have an idea on a deal like that you retain?
Yeah, so I think essentially it's around 20%, but we set up like a waterfall where we start at, I think it's a little bit under, and if we hit some certain revenue targets, then we get a 5% kicker, and then there's another kicker.
Nice.
So we can, and that's a great way to structure it. And how even that's how I've structured our ground up funds as well. It's a return on capital based hurdle. So until
Beautiful.
investors get X dollars back, they're 1X, we participate at a certain level. And then once they get a 2X, there's a step between 1 and 2X, and there's a step post 2.5X. So we kind of like stair step it, but have it completely aligned, and give the investors a bias, towards getting their money back before us.
So this is fantastic for this buyer. Can you mention, don't give away his name or identity or anything, but just like what's the sort of buyer that did this deal with you? Because he's got a really
Yeah,
good
so a lot of
outcome there.
times, yeah. I mean, it like this guy in particular, I think he's coming at it like he has experience in, professional business experience. He's a, very capable, intelligent, successful person in his own right, but coming from the offline world. And so he's been interested in getting exposure to digital. And there's
Okay.
actually like very few ways you can kind of do that.
Yeah.
Certainly at the, at the scale with that. I mean, you can go very passive, but I think for the people that want to be operationally involved and kind of steer the ship a little bit, there's not a lot of good options out there. And so, yeah, so he's coming at it kind of as a lifestyle. He's planning, I think, the second phase of his life where he doesn't want to be on the road,
Yeah.
24/7, doesn't want to be in airports and traveling as much. And this is kind of like almost like a, not a retirement plan, but like an exit ramp that he can gradually transition
Yeah.
away from the corporate, routine into something a little bit more flexible and fun.
So
He's actually an enthusiast in the space. That's also helpful too.
that's cool. Yeah. So for him, I think you mentioned like, yeah, he's a pretty busy corporate type guy, high income earner. And he's just, like you said, he's thinking about his retirement and he sees this and he's just come out again. It sounds like the win-win outcome for the two parties. You get a significant chunk of cash off the table, but you still retain 20% ride of that website plus a 5% kicker later on. And you've got it sounds like you're working with a really nice guy. He's happy. He's got a retirement plan or a transition plan, possibly from corporate. So if you're listening, realize the world's changed. It's not like in the old days when if you're a corporate high income earner, we would sell you or help you buy a bricks and mortar business. You'd be up for millions of dollars and everything's on the line. This day and age, you can get involved in, with a company like Venture Forth Capital and Venture Forth Media. Sorry, I was calling it Capital. Venture Forth Media.
Okay.
And there's all sorts of ways you can work a deal. So and those of you who are listening who are good website operators, you can learn from Ewan here what he's done, which is he's selling off his websites, but getting, I guess, in a way, you've got, you've got capital off, but you've got investors, or you retain ownership of these winning websites. So this is evolving into a really good space for you for the future. And then Ewan, if you presumably this is rinse and repeat, you've got a whole portfolio of websites, you've got multiple JV partners, and I guess that's the way forward for you over the, it's a very smart move. You've set this up
Yeah.
really well.
I think it's kind of like I was examining the inverse, like what are we not doing too, and like
Yeah.
learning from some of our
Yeah.
mistakes. Like we're not going
That's a
out
good
there and being
question.
like, oh, we'll raise a ton of money, like like some of these FBA aggregators, and just buy a bunch of big things just because we can raise a lot, and then go buy content websites that are seven
Yeah.
figures and above. Like that's like a whole different ball game. And what we've realized is that we're really good at like 0 to 1 or like now I guess we've got like 1 to 2, like in that, like you said, sub 50K range where you can acquire some, like rehab it, get it up on, or use the foundation and build something great on top of it. Find some expert writers, like build a community around that site, and kind of like take it to that next level. But then with the kind of the flip side being there's a certain size where we're going to seriously consider taking risk off,
Yep.
and selling and kind of finding those little opportunities and kind of like within reason staying in our lane, but also like getting back to that omnivore approach, being able to like rather than looking at what deals are currently for sale or like what we can currently build, like what gaps are in the market, kind of broadly speaking, zoom out and say what verticals do we like,
Yeah.
what verticals given our experience now, and that's really the moat around the business is the learned experience and the data, the traffic, the actual traffic numbers, not what SEMrush or Ahrefs tells you,
Yep.
and the actual conversion rates and the affiliate partnerships and the deals that we've brokered with some major brands. We have a custom rate card, we have a unique advertising model that we can work with them on, and once we have that information, the websites aren't just like it's like everyone's seeing chicken. Like they actually have some. They're different to us, right? Because we have those unique advantages, and so then we can say, okay, like we want to be in these markets. We want to build more around these, these strengths. What's the best approach? Is it a build approach? Is it a buy approach? And then we can kind of toggle between those, and that actually helps us be better builders and better buyers by being able to toggle between that and understand the replacement cost really intimately, but also understand like what does it mean to buy a site with 300 articles for $8,000. Like
Yep.
maybe you're buying below replacement cost,
Yep.
below what it would cost us to build that site from zero today. So those are the types of trade-offs I like to play with. And again, the site we acquired, I think, had 20,000 email subscribers too. So there's like little things like that, little advantages that we really want to be ready for, and be flexible. Not be tied into, because I think a lot of times either on the buy side or the build side, it's like, okay, I want to start a site today, or I want to go buy a site. It's like, what's available on the market, and I give arbitrary deadline. In the next 3 weeks, I want to buy an online
Yeah.
business, and a lot of times that's a very limiting perspective. And so to be able to be a little bit more flexible, I think, is the key to where we are now, kind of in the maturation of our view on this asset class.
And that is just unreal today. I want to give you a really big thank you, because I think this is absolutely perfect. I think you've just helped inspire so many people in our community, because they're all, that feeling. They're starting out small, but they're literally following, because we teach it, the plan that you're executing on right now. So everyone listening here can see a model for how this can work. And like Ewan said, understand too, if you've got more money, you can buy much bigger websites. But isn't it interesting? I really like what you've presented here today to our community, because it's about reducing risk. Even though you've got millions of dollars to play with, you're buying sites under 50K, building up a portfolio, but also building websites, and also then working out these deals with your investors, and still for yourself and your organization retaining ownership in the websites. And it all revolves around, guys, learning this stuff, what we teach at eBusiness. Seriously, I'm going to give ourselves a plug. We teach this really well, I reckon. I'm just listening to you and here going, yep, that's what we teach. Yep, that's what we teach. It's all about, as Ewan just said, breaking down simply, it's a content strategy and working with, hire extra writers for each website. But the good news is you can start out really small, guys. You don't have to go out there and take massive risk. This is particularly important in light of worldwide events. If there's a potential recession, this is still a relatively safe, I won't say totally safe, but as you can see, still a relatively safe business operation with potentially massive upside. So I do want to say a massive thank you to Ewan for coming along and sharing that awesome update and what's happening out there. And what we'll do for you as well, we'll obviously put some links in the show notes for you as well. And big thank you. And guys, seriously, if you want to learn how to do this, if you're new to this podcast, make sure you try and sign up for our free masterclass. We go through literally the strategy that Ewan is doing here, and we show you how you can start out buying small websites and build it up into a portfolio of money-making websites that then you can do whatever you want with. But it all starts listening to our free masterclass. So get onto that and check that one out. And Ewan, thank you so much for coming along today.
Great. Thanks so much, Matt. It's been great to kind of do the follow-up, and looking forward to more.
Absolutely. Yeah. Can't wait for the next one. Awesome.